typically gold is considered a safe haven, and so that's been its main sort of MO. When there's uncertainty or chaos in the world, people tend to drift more towards gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today, long time no see, guest Tony Reda from Tectonic Metals. Tony, thank you so much for joining us today.
Thank you again for having me. It's a pleasure to be here.
Well, it's great to have you today. I know in 2022, we met personally at the Rural Symposium, and you've been invited back multiple times since then. And we had you on talking about Tectonic Metals and the company because it is a company that's been hand-selected by Rick Rule to be at the Rural Symposium multiple years now. So I wanted to get into that. Rick Rule obviously has a keen eye to pick out the companies that he thinks are going to be doing well in the future. I wanted to get your perspective and update on the company. But first and foremost, since the last time we talked, we've seen, almost a doubling in the gold price. So I wanted to get your perspective on that. And also in the silver price, a huge run over the last year and a half. What is your take on that run and how has it been impacting Tectonic Metals?
Okay, well, first off, I would say that, typically gold is considered a safe haven. And so that's been its main sort of MO, when there's uncertainty or chaos in the world, people tend to drift more towards gold. Now, that's always been the case. And that's always, I think that will always be there. But what's changed now is that, the traditional little darlings of the stock exchange, the Teslas of the world, Apple, the FANG stocks, NVIDIA, and even the S&P has shown a bit of strain. But the point being is those stocks that the general investors tend to flock to have shown some strain and some duress. And now the value proposition that gold or gold exploration stories present has changed, that you're now seeing those investors say, okay, where can I find value and what space or sector do I want exposure to? And in fact, gold bullion has outperformed the S&P. So that's gotten their attention and say, okay, maybe we need to allocate some funds to that. The other thing that's happened or transpired over the last couple of years is that the major mining companies are fully taking advantage of where the gold price is at. The majors such as Newmont, let's just say, for example, they've elected to buy production. And this has been a common theme amongst all the majors is like, let's focus on production ounces. So they've amalgamated, and they did this before the huge bump in the gold price. So now someone like Newmont, for example, that produces 5 million ounces of gold annually, roughly, generally speaking, they're seeing some massive gains in their quarterly and their annual profits. Agnico doing the exact same thing where they've announced that, they're announcing share buyback programs, increased dividend. Again, that just adds more fuel to the fire where the broader ETFs, the indices, and general investors are now shifting some capital, more capital, I would say, into the gold space or into commodities and silver, for example. So that's created a pretty good backdrop for us to now leverage that and continue to move things forward.
And I think one of the things that Rick Rule highlights always is he wants a team with a track record of success. And also, I think one of the things that's interesting about your company as well, with the Flat Gold Project, there's a track record on the land as well, if you want to tell us a bit about that.
Yeah, actually, that's a good point. I might have to use that in the slide. So thank you for that. So the track record of our team success, mine more specifically was Kaminak Gold Corporation. I'm actually at the Rick Rule Symposium right now as we speak, as you mentioned. And one of the talks I gave at a breakfast session, completely sold out, by the way, over 80 people in attendance, was called Deja Brew. It was a take like Deja Vu on the Coffee Gold project, which we sold for $520 million. So we took that project from never drilled before to 5 million ounces, produced a very robust feasibility study, brought on 3 billionaire shareholders as sort of white knight shareholders to shield us in the toughest of times, so we weren't vulnerable to any hostile takeovers. And then again, selling it for 520. So that's the team's history. That's just one of many accolades. And I think in total, we found collectively over 30 million ounces, my team. And then on the project itself, the Flat Gold project, it does have a track record of success where it initially got its notoriety or fame through placer mining. And the famous New York Guggenheim family, or the Guggenheim Museum, actually had a placer mining dredge parked at site, mining our most prolific creek, Alpha Bowl, 650,000 ounces of recorded gold production from that one specific creek. But the entire property, the flat property, has over 1.4 million ounces of recorded placer gold production, and it ranks as the third richest placer mining jurisdiction in all of Alaska. So that's where its proven track record success comes into play here. So rich placer endowment, and we're now obviously after the bedrock source for all that gold, and we're onto, I think, something significant. Hence, the most recent capital raise off of this Alpha Bowl discovery, which is where that Guggenheim dredge was parked for probably 2 decades.
And how much does the increase in the gold price really play into gold discovery, if you think about it? Because I mean, it's not always that you have a year and a half where, the land that you're digging, right, the asset in the ground just increases by 50 or more percent. I mean, that's pretty impressive there.
Mm-hmm. Yeah, it's funny because not everyone has wrapped, and when I say not everyone, I'm talking about not only investors, but actually industry, geologists, CEOs, executive teams. They haven't really wrapped their head around what the significance of a $3,000 and higher price per gold ounce, what that actually means to the economics of a projects. We tend to think even like a 1 gram per ton is like the be all end all for a project, or even higher grades. But at this sort of price point, things that are 0.5 gram per ton become extremely profitable. So it is remarkable that we're actually playing catch up in many ways to say, okay, now this project that perhaps was marginally economic is now even more economic, or something that was economic is now even more economic. Yes, there's some inflation costs that sort of counterbalance that, but the entire landscape has changed, and any sort of discovery right now is going to have a multiplier effect or a compounding effect. Well, why is that? Well, the $3,000 gold price, the majors that have bought production ounces, such as Newmont, they produce 5 million ounces annually. So they have to replace those ounces. So they're now they've created, it's kind of a reserve crisis, as something Mark Bristow, the CEO of Barrick, actually went on record saying, we've kind of done this to ourselves where we've created a reserve crisis. So they now have to replace those ounces. And as we all know, regardless if it's a gold deposit or silver deposit, high caliber or high tenor tier 1 type of deposits are getting harder and harder to find, especially in politically stable jurisdictions, or such as North America, such as the US or Canada. So they're going to be even more coveted, and hence the premiums that someone's going to pay is going to be much, much higher than where they were at, say, even 4 years ago or 3 years ago.
I know one of the times we interviewed you, we were highlighting $2 million investment back, a couple of years ago. You guys recently had a $13 million investment. So it seems like, a lot of people are kind of moving their eyes towards your company. Can you explain a little bit about this, and also kind of the significance of, a $13 million investment there when the market cap of the company is $25 million. So it's a significant move there.
Yeah, it really, so we were a $25 million market capitalization. We had a $25 million market capitalization, and we went out with a $7 million raise and ended up having demand over $15 million. We closed the books down at about $13 million. And it's very unusual that you have such a low market cap with such a huge capital raise. And that just really identifies just the value proposition that Tectonic was offering. It also highlights the current environment that we're starting to see this shift where, again, the journalists and others are moving into the gold space. And the third point is that discoveries, to my point earlier, are getting noticed. So that capital raise that we just completed was predicated on a drill discovery that we announced in March of this year. And again, it was from that Alpha Bowl area where there's this historically rich placer mining creek that produced 650,000 ounces of gold. We tested the source of that, and lo and behold, we made a significant drill discovery, and now we have 3 drills turning on that site. So the excitement around discovery demonstrates that you can get capital inflows on sort of new exciting stories. And now with that kind of treasury, we feel that we can make a significant dent into the project, but also take that capital and turn it into 3x or 4x or possibly even higher return for our shareholders. Ultimately, the game that we're playing is trying to find a mine and doing it ethically and responsibly with native or indigenous support. And with that kind of capital, we inch closer to that goal, and we can now truly test this project and make a material difference with a multitude of drill holes. If you're not drilling, you're not finding anything. And obviously, the more you drill, the more you find. Technically, or in theory, that should be the case. And so we think we're going to have a transformative year here.
Do you want to highlight for our viewers who might not have, might be new to investing in the mining space, where there's kind of different levels of mining, right? You have the majors, you have the juniors, and you have the discovery companies that are higher risk, higher reward, though, potentially. So being a discovery company, how do you guys, what does that mean for you? And how do you hedge that extra risk that you're taking on?
Well, yeah, great question. Exploration is considered risky. It's speculative in nature. How do you hedge that risk? Well, the team. Rick was doing an interview recently, and he spoke about, unbeknownst to me, and he was doing an interview with this other like on a podcast, and he said Tectonic finally put numbers on the board, and I'm a buyer of the stock. And he's like, you have to remember that they've done this before. So the fact that we've been able to not do this just once, but several times, where we've turned something from never drilled before to a multi-million ounce project. We are familiar with M&A. I think we have over $2 billion collectively, the team, as far as M&A transactions are concerned. So that betting on a team that knows their way around, or a jockey that has won before, and it could be considered a way to mitigate that risk. I also tell investors, we all get lumped into this exploration or discovery stage company, but there's different levels of risk even within the geology. For example, if there's placer gold there, well, there's obviously that gold came from the site. It's a matter of discovering it versus an area that has no placer gold or geological evidence per se. Another risk hedging asset, I guess, or technique is that we actually have an exploration methodology that has a 100% drill success rate. So we've taken soil samples, taking a sample of soil, running it for analysis. And when you take about anywhere from 2,000 to 3,000 soil samples, you start to get especially in an unglaciated terrain like our property, you start to get an expression of the deposit. And then you put a drill hole in it, and you hit, which we have done. That tells you that you can trust that the soils are actually mimicking the deposit or potential deposit below your feet. So we've done that, whether historically or Tectonic. There's been 86 drill holes that have gone directly underneath golden soil anomalies, and they've all hit gold. So we have 100% drill success rate. So does that make our odds of finding something significantly greater? Well, I do, especially when you have only 50% of your golden soils tested. And again, you have 100% drill success rate. There's also risk with jurisdictional risk. There's First Nation or Indigenous risk. And on those fronts, we think we're in a tier one. Well, we are in a tier one jurisdiction. We have 7 producing mines We're in the state of Alaska, and also on the First Nation or Indigenous side of things. The landowner, who happens to be Alaska Native Corporation, has also invested into Tectonic. So it's not just the Rick Rules of the world that believe in Tectonic. We actually have Indigenous people, and to the tune of $5 million and actually higher, saying, we want to invest in your company and we want you to find a mine on our property. And we're in full support of that, because nothing speaks more loudly than someone actually giving you their hard-earned money and saying, here, go do what we think you do best and go find a mine on our property. So that's some of the things as far as risk mitigation is concerned that we offer versus some of our peers.
And one point maybe regarding the market itself at this moment, over the last year and a half or so, as we've really seen metals increase, it seems like there was a period where the mining sector really was not catching up at all, but we've recently seen that catch up. Did you want to speak to that, how the market seems to be changing, and maybe investors are moving their eyes now towards the mining sector and seeing it more as, a feasible option for investing in metals?
Yeah, I think I've said this on the podcast before, but it's worth repeating that, as far as I'm concerned, money follows money. So what does that mean? Wherever money's being made, that's going to catch people's attention, but also their imagination. And so if you look at even, again, the majors, because they're cash flowing or their production, and they've really been able to capitalize on the current gold price, they've also been able to shed their non-core assets and get their all-in sustaining costs in check, relatively speaking. But the point being is that if you look at Agnico Eagle, a year and a half ago, they were $40 a share, $50 a share, sometimes touch $60, and now they're over $120, $130 a share. The share price chart just looks like it's the side of a mountain. And so people have made money on that, and the funny thing is, they still, as they should, they expect better numbers going forward from Agnico. And so that share price just keeps on climbing, and then that has a spillover effect or a ripple effect. And, again, people are saying, okay, where can I make money in the sector? And when you have gold outperforming the S&P, you now have Agnico, where the metrics earnings per share were like, wow, this is like, they should be trading much higher. The valuation is going to be much higher. This, I think on the last quarter was $750 million of cash flow that potentially wasn't realized in, say, 2-3 years ago. That's now on deck. They're doing a share buyback. So that just carries over. And that's kind of what I think is fueling the excitement in the space. And then you have junior mining companies, say Snowline, for example, if you're familiar with that story, these brand new grassroots discoveries that, now they're trading over, I think, $1.5 billion market capitalization. You have Filo, Copper, and other, in the copper space, these companies are getting acquired and taken out. And we're seeing even the royalty companies recently with Royal Gold and Sandstorm. These are multi-billion-dollar transactions that are transpiring. And it's more fuel to the fire to get the generalist or the person that said, you know what, I'm not touching mining. They're now starting to come back. And we're seeing it even here at the conference. Every year I come to the Rural Symposium, and there's more new faces and more new faces. And Rick's done a great job in attracting sort of the next breed of natural resource investors. And I think we're just at the start of something significant. I do believe it's going to keep trending higher, especially if
gold stays where it's at or continues to rise. It's going to be a pretty healthy environment to park some capital in and realize some real gains here.
And if our viewers are interested in learning more, they can find a link in the description to your website here. But I know you also personally like to speak to investors as well. So can you tell us a bit about how our viewers can find more about Tectonic?
Sure. So, our company name, to repeat, is Tectonic Metals, Inc. We do trade on the TSX Venture under the symbol TECT. We're also on the OTCQB, or a U.S. listing, TETOF. And website tectonicmetals.com, and Tony at tectonicmetals.com, or you can sign up vis-a-vis our website to stay informed with regular updates. Those are great avenues to interact, and I always welcome good conversation with good quality people such as yourself, and always have the time to make that happen. So thank you.
have a great time at the Rural Symposium. Again, that really highlights your company as one that Rick Rule has handpicked with a track record of success. And really appreciate you taking the time today and sharing with our viewers your company. Thank you so much.
Thank you for having me again. I appreciate it.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.